you are ready, we're rolling.
Okay.
Hi, Diane Davidson here, and we're back with the Good Deeds Podcast, Real Estate with a Mission. And today is one of my favorite things to talk about or to listen to. I have Bill Weidecker with me. Hi, Bill.
How are you, darling?
I'm great. How are you?
Good. It's market update.
Market update. The numbers for October are in, and Bill's going to go over the highlights for us. So take it away.
Well, I would just first of all tell you the news is more of the same, and where we stand through the end of October, so through 10 full months of the year, we are closed sales. We're close to being on par with where we were last year. What I mean by that is we're off by a few hundred units less. We're at 98.7% of where we were last year in terms of closed sales.
So year to date.
Year to date.
Got it.
And I think that's a reflection of the fact that inventory or the lack of being able to get it has played a little bit of a role in our closed sales. And I think this is the first year we're starting to really feel that if we had more properties on the market, we would have sold them all.
Clearly, there are
Yep.
many buyers for every house, typically, right?
No doubt.
Yeah. Yeah.
We're tracking, when I look at the numbers, I look at the numbers every single day for the last week.
Mm-hmm.
And I just, because I take out all the bumps and valleys of a week, the weekends and the beginnings of the week. I look for a week and I see that buyers going under contract are beating sellers coming on the market by 1 3/4 to 2 to 1.
Mm-hmm.
So there's more than enough buyers still out there.
And at a peak, was that closer to 2.5 to 1 at times, 3 to 1?
Well, I even saw it as high as 3 to 1.
Yeah.
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 And sort of sustained for a little while. But now, so to give you an idea, median sales price is up, way up, year to date. This time versus last year, 18.2%.
Wow.
So what does that mean to the average homeowner, or to the median homeowner, excuse me, in New Hampshire? It's $60,000.
Wow.
Last year at this time, $330. Now $390 on the button, $60,000. So if you had the median priced home last year, it was worth $330. The median priced home this year, it's worth $390.
Do we know who owns that median priced home? Have you ever figured that out?
We're looking for them.
Okay.
We're looking for them. And then part of the reason why I say if we had more inventory, Diane, we would have sold it all. The market time is down by half. Last year, right now, we would be talking 50 days on market. This year, 25.
Wow.
So it just gives you an idea. If we had more houses, we'd sell more houses. And the buyers would be buying more houses.
Yep.
Pending sales, we're off a little bit. 15,556 versus 16,800 last year. So that's about just under 8%. So pending sales are down by 8 percentage points, where year-to-date closings are down by 3.3. What does that mean?
Yes.
It means this: the pending transactions are down for the future even more than the closed transactions are down year-to-date. We're down by 3.3%. We're down by almost 8% closing in the future. So if form follows function, inventory's still playing a role. So I think the idea that this is over soon might be a little too early, because we're still finding that inventory is playing a huge role. And if you look at, here's another, just to bolster that, for instance, homes for sale right now. In the entire state, there's 1,721 homes. Last year, in a very, very tight inventory market, there were 2,400 homes. So what does that tell you? We're off by 28% over last year. And to give you even further context, 2016, so 5 years ago, there's about 8,000 homes on the market. So almost 4.5 times as much inventory. And 8,000 wasn't, but we'd been in the downturn, 2009, we were 15,000, 16,000 homes on the market.
Mm-hmm.
Now we have 1,700.
10%, a little over 10%.
Yeah,
Wow.
it's crazy. And then list price to what it sold for, you're getting all of what you're asking for on average. It's 102.7% of list price.
Is that down a little bit on average?
No, this time last year was 99.5. So we're up.
This time, all right, yeah.
Could we have hit a yes, because we
Yeah.
look at these numbers on a monthly basis, and so last month was 101.5.
Mm-hmm.
So year to date is 102.7, so that tells you it had to be a little higher.
Yeah, I remember 104 at some point.
Yeah.
but
Yeah, it's
close.
just it to me is, all of this speaks towards the fact that it's this, demand and inventory, it's the key to all economics, supply and demand. There it is, the demand's still there, the supply is not. The one fly in any of this ointment is the fact that the affordability index last year was 131, this year it's 107.
Can you just explain?
Lot of numbers, right? There's a lot of numbers that we've just thrown at you and you're glossing over if you're listening to this or watching this. But 131 affordability index means that the median income earner in the state of New Hampshire could afford the median priced home based on the qualifications at 131% of qualification.
Mhm.
Okay, they're making 31% more than
Well
they needed
before.
to.
Yep, yep.
By a third, they were overqualifying. Now it's 107%.
Just barely.
So less than 10% ahead. We're getting to a point where when I think you find, does it mean if you get to a point where you say, oh my God, the median priced home is what the median income earner can afford, it's 100%. It doesn't mean that homes aren't still selling because you obviously have a lot of cash sales. It means, in my opinion, the end is near in terms of where prices are starting to equal what it costs to afford them. There's not a lot of froth left.
And a change in interest rates could change that immediately, drastically.
Overnight,
Quickly.
overnight,
Yeah.
yeah, because we're so close.
Right.
So, yeah, I do think we know this, that, I mentioned this earlier today, is that, we are at a point where we're looking at inflation being 5 or 6% now, the most recent numbers. I don't think it's something that we can just ignore anymore. Inflation is there. Prices are up, gas prices are up, food prices are up. We know this intuitively when we go to the grocery store or when we go to the pumps. We go, that seems like a lot.
Mm-hmm.
This is what I will say. We also know that there's huge demand on rents. And if you're renting, there's gonna continue to be price pressure on rents.
Mm-hmm.
Where we don't see price pressure, people who have mortgage payments. It's fixed. In most cases, the average mortgagor today is at a fixed rate. So their payment is fixed. And I will say this, everybody that's bought a home in the last year, in the spite of the fact that, they were saying these are so expensive, they're sitting on equity now. And whereas inflation has sort of chipped away at their savings elsewhere.
Mm-hmm.
That's it in a nutshell.
Anything anecdotal, any change in back on markets, things
Well,
that's a little bit different than what was happening in the last?
It's
months?
going to sound a little, this is, you wonder, who does a market like this favor? Well, it's obvious that you think, well, it's obvious that it would favor the seller, somebody that needs to sell a property. Could it possibly favor a buyer?
Mm-hmm.
And I think it does, because you're able to lock in a price, you're able to lock in a payment at a low interest rate. And the National Association of Realtors is predicting that rates this time, a year from now, could be around 3.7%. So, we're talking about, right now, mortgage rates are around 3. You're talking about 0.7 of a full percentage point
Mhm.
higher. That's going to affect things.
Significant.
Yeah. So it's a good time to buy. It's a good time to sell.
Mm-hmm. It's a hedge against inflation, it sounds like. If you're a tenant, the renter.
Home ownership definitely is,
Yeah.
because one of the things about it, what you'll find is that interest rates are the great equalizer. As interest rates go up, your pricing will start to freeze, because
Right.
once you get down into the 90 percentile of the median
Medians,
income
yeah.
earners being able to afford the price home, prices aren't going up any further.
Right.
So I do believe if you're thinking of selling in the next couple of years, you should really talk to us about what it looks like for selling today versus 24 months from now.
Or for buying, it sounds like, for that matter.
Well, definitely.
Okay.
Yeah, because I've been through all kinds of markets. I've seen backslides happen in only 2 markets, only 2, and not for long, right? Like, people will say, well, what, didn't prices drop by close to 25-30% in the late 2000s? They did, and they did it over 5 years. They were dropping a few percentage points here, 6%, 7%. They were dropping, and yet we were selling houses in all of those markets because there was lots of good reasons to buy.
Mhm.
And anybody that bought, even in 2007 or 2005, they're that have stayed in their house because they wanted to live there, their houses are worth more today than what they bought them for in the previous peak. So if your long-term interests are being in the home for a while, I think you're going to be fine. I really do. If you're looking to buy a house and sell it in a year and expect to see $60,000 in income as a result of it, I don't think that's a good strategy. This happened to be just good fortune. But saying, let's do it again, let's buy 5 this time, and hope that it'll go up by 60,000 and we'll have $300,000. I don't think that's the
Not the play.
play.
Okay. Anything else I forgot to ask you?
That's a good question. No, I think we got it covered. I
Okay.
mean, essentially what happens in single family homes is happening in the condo market. There's just less of it. There's less of it.
Okay. I know you just came back from the National Association of Realtors Convention with all sorts of wisdom, information, pamphlets, free things. Anything to share from there?
Well, I would say this. One of the things that came up is there was a lot of discussion about Zillow and the fact that they suspended for a period of time their Zillow Offers iBuyer program, which is they would buy properties from homeowners. They've now stopped it altogether. And right today, the 18th or 19th of the
18th, I think.
Let's remove all doubt.
I
Is
just got the
it
nod.
the 18th? So the 18th. So today's Wall Street Journal, there's a front page followed up by several pages in a full page of that article on Zillow and their algorithm and the mistakes that were made in their iBuyer program and what's happened in the marketplace. So there was a lot of discussion about that. It just means that, they really dwelled upon what their estimates told them and based some of their purchasing decisions on it. And they may have overpaid for their properties by 5 to 7 percentage points. Unlike some of the other iBuyer programs who are really were buying with a much sharper pencil because they were looking to flip, as was Zillow, but Zillow was paying attention to their own algorithm. And they made a critical error. They now have 18,000 homes to sell, billions of dollars in value. So that means hundreds of millions of dollars in losses for the stockholders. So I don't think that Zillow's going away. I just think that this was one of the big topics out there. And if you plug into your search engine Wall Street Journal Zillow, you'll find the article from today. It's quite something.
So as a result, have they adjusted the estimates on properties that they don't own?
I don't know. I really don't know that. I think that here's I heard a really interesting thing is that iBuying programs in general can't smell pet odor. And it really comes down to this. If you've got a computer that's going to buy your house, it can't make all these determinations. And it's one thing if you're comparing a brand new house that's never been lived into another brand new house that you just bought, and the floor plan's the same and it's right next to each other, and the orientation of the sun is the same, everything's the same. Sure, you can make a decision on what to pay for it.
And it never works that way, does it?
It's always something a little different.
But I also like to say too that the sale price, it's not just price, it's terms too. So when we actually adjust the sale price and we don't consider what the circumstances were and what was negotiated with the buyer, you don't really know what the value would be in other circumstances, right?
Mm-hmm.
So it's never an exact science. You always say it's more art than science.
We talked about this as one of the other things that came up, as there was a recent data study of home ownership and the pandemic.
Mm-hmm.
And so the question was asked of homeowners, have you thought during this pandemic about buying a second home in addition to the one you own, right? 26% said yes. That's 1 in 4 homeowners have thought about buying a second home, which to me was a staggering number. And it made me realize there's a lot of people out there that I probably have not spoken to and said, have you thought about this, and should we talk about it?
Should they call you?
They should call you.
But that's also people who haven't bought one yet. When you
Right,
think
9%,
about
9% of the people own one.
and 26, so it's really 35%?
Well, there was,
Have bought or
there
will
was,
buy?
so it was 26%, and then 34% of those polled said, I don't wanna be bothered with a second home.
Mm.
So that to me speaks to a different issue, which is what if you weren't bothered? It's a follow-up question, right?
Right.
What if you weren't bothered and somebody managed it for you? So there's a lot to talk about, and it made me come out of those meetings thinking, these are conversations that the average homeowner would love to have. It doesn't mean they're gonna buy, or it doesn't mean they're gonna sell. It means that they should probably be thinking about this in a different way, much like they think of all the other asset classes they
Mhm.
have,
Yep.
right?
No doubt.
So, I mean, you'd certainly wanna meet with if you had your retirement accounts, you would not stand for not getting those reports in the mail at least quarterly, or hearing from whoever had your IRA or 401k or any of your other investments. Do you imagine if your financial advisor said, we're not sending the reports anymore, we're not gonna let you
Yeah.
know what it's worth?
It's our secret.
Yeah. So I think from my perspective, I think it's good to talk to your real estate professional, find out what's going on with the property you have.
Mm-hmm. Okay. Well, thank you. That was very enlightening.
Yes.
Ready?
Okay.
Yeah, yeah.
So say thank you for watching. Please don't forget to subscribe on YouTube and follow us on your favorite podcast platform. And we'll be back next week.
Thank you for watching. Thank you, Bill. Thank you for watching, and please don't forget to subscribe on YouTube. Watch us on your favorite podcast platform, and we'll see you next week.